over 16,000 Bitcoin now, and will continue to run. Yeah, our Bitcoin HODL is over $1 billion. January of last year, Bitcoin 15,000. Here we are sitting at Bitcoin nudging 70,000. So this is all about nation state security and treasury management.
New boogeyman.
The US government holds 1% of all the Bitcoin.
Sounds like you're a few cycles ahead in your thinking. The criticism of Bitcoin miners that they're destroying the planet, boiling the oceans, using more electricity than sovereign nations has seemingly slowed down. I talked to Fred Thiel, the CEO of Marathon, about what's going on in mining, what they're building, and what the future of mining looks like, but also about how the environmental impact narrative is likely about to shift to a much, much bigger industry, and that is AI. You don't want to miss this conversation.
Let's go.
And Bitcoin mining is a hot topic right now because we got the halving coming and we're at all-time highs. So it's a rare situation that we really haven't had before. Is it different this time?
It's certainly different. Last time when you think about it, halving came, dip in price of Bitcoin, scramble, and then Bitcoin went on its progression upwards. The ETF has thrown everything all the rules out, right? Because you have a vacuum cleaner that's just sucking up all the available Bitcoin right now. And between the ETF and Michael Saylor, if you look at how the market has responded, I believe, and you may know this better than I do, but the AUM held by Bitcoin ETFs right now is somewhere approaching $40-ish billion, which is approaching 50% of the gold. It's higher.
Yeah, I think it's actually, yesterday was 53 and we're recording here on Friday. So it went up even slightly. It's probably in the 54, 55, including GBTC. So pretty wild.
Yeah. Yeah. So gold is at 90-ish plus billion of AUM in their ETFs. So here we are. Took gold 20 years to get here. We're going to do this in 3-4 months, maybe.
Crypto investors in the United States face some major challenges. One of them is that there's almost no way to get exposure to the asset class inside of your traditional investment vehicles. The other thing is the taxes. They are absolutely atrocious. What if I told you there was a way to solve both of these problems? Well, there is. And it's with a self-directed IRA from iTrustCapital. Guys, not only can you open a new self-directed IRA and fund it with the limits each year, but you can actually convert over from your 401k, your Roth IRA, any other IRA that you already have, and you can do that tax-free, just transferring over the balance, and then you can go to cash, buy as much Bitcoin as you want, and not pay taxes when you sell it. You absolutely have to try this if you are in the United States. Use the link down below. It's bit.ly/iTrust-Scott. That's bit.ly/iTrust-SCOTT. You have to try this now. Yeah, it's astounding. So what does that actually mean for miners? As you sort of hinted at before, and we know, I guess miners who are a bit weaker or a bit underprepared generally have to sell off quite a bit of Bitcoin just to remain solvent in advance of that slow period awaiting all-time highs in past cycles, right? Like you said, you sort of have the halving, it's a non-event. And then 6 or 7 months later, the actual supply reduction starts to matter and prices start to go to all-time highs and we have our cycle. Now they're probably under less pressure to sell if prices remain where they are.
Well, there's another factor. In our industry, it's about capital, capacity, meaning where you plug your miners in, and compute, which is the mining rigs. The mining rigs it's been a glut market. People are still able to buy miners. All of the big 3 miners, we all have orders with locked in pricing, locked in supply well into the future. Capital for the public miners has been easy to raise. The private miners have had a harder time still because there's no equipment lending like there used to be in the rah-rah days. You could go to Galaxy, you could go to NYDIG, you could collateralize these machines. You can't do that anymore. So that favors the people who have access to capital. But capacity is a constraint, right? So there's a lot of orders out there. People have a lot of machines on order, and now they're scrambling to kind of find places to plug those in. So the actual hash rate increase will lag. But with the Bitcoin at these levels, what you're seeing is, many miners, not Marathon, but many miners are selling every Bitcoin they generate because they just don't know when the shoe's going to drop. And because they don't have access to credit lines or the public markets, they're having to sell. So, I think we're even seeing some old mining wallets. And there was a note somebody wrote, a 10-year-old wallet,
Yeah, 2010 wallet sent 1,000 Bitcoins last Tuesday, right when it hit an all-time high and sold effectively.
Yeah, and this week or the end of last week, I believe somebody reported that there had been 8 transactions of over 500 Bitcoin each. That's pretty large volumes considering a normal day in Bitcoin is $20 billion of trading. We're now trading close to 50 billion a day of Bitcoin. I think there's a lot of because the ETFs are cash settled T+1. I think there's a certain amount of potential market games that are being done by hedge funds and others where they can go in, buy ETFs, and then the market closes on Friday. The ETF has to buy the Bitcoin on Monday. Bitcoin price is going to rally over the weekend, right? Then you short that Bitcoin. So I think the market is learning about it. If the CFTC would allow futures that were commodity settled, I was speaking with a trader yesterday, and he said, Bitcoin would just run because people would just buy futures, sit on the Bitcoin, take delivery of it, right? And it would just run. So I think we're in for a very volatile market. You saw the swing the other day. It was a 10% swing. I think we're going to see a lot of that as you get this kind of demand that needs to be fulfilled, and then all of a sudden a bunch of coins come on the market. You're going to see a lot of OTC desks doing a lot of trading. The exchanges are still going to be tight. I know we get frequent calls from the institutional desks at exchanges just saying, hey, where can we find Bitcoin? And so I think the market's running right now, and fingers crossed when kind of the demand kind of abates, we'll settle at a good level for everybody. And then we will sally forth and see how the rest of the bull market goes.
Yeah, and I think we all believe that there is a further continuance of this bull market coming based on past cycles. But as you said, a lot of miners are still selling just in case, right? What if this is the top? That's sort of the mentality there, correct?
Yeah. I mean, just think about things. January of last year, Bitcoin 15,000. Here we are sitting at Bitcoin nudging 70,000. 65,000. For a miner like us, our SG&A and our operating costs get covered because of the high price of Bitcoin by not a lot of Bitcoin. So our HODL keeps growing. We're over 16,000 Bitcoin now, and we'll continue to run. Our Bitcoin HODL is over $1 billion. These numbers are kind of, quite staggering, I think, as you look at it going forward. And not to mention how the success that MicroStrategy has had, and with their market cap almost doubling recently. So it's, I think people are looking for all sorts of ways to have exposure to Bitcoin. There was a rotation out of the miners into ETFs because of the halving coming up, and I think post the halving, people will go back and see the beta advantages of investing in the miners, and it'll be back to the kind of traditional model of one asset class, one of the assets playing off against the others.
That's exactly my thesis. People were so surprised that with Bitcoin running this high, miners were sort of bleeding, right? But it does make sense if people were buying miners or MicroStrategy or Coinbase or any of these proxies effectively for a spot ETF, that they would rotate into the spot ETF once it was approved.
Yeah. So, may you live in interesting times, as the proverb goes.
So do you think that we're going to see sort of one of these mass extinction events post halving of, a culling of the weaker companies and the individual miners, and sort of a further consolidation into the larger companies? Or do you think that the high price could fix that or save them?
I think it's just putting an inevitability, pushing it out a little bit further out. This allows miners to continue to mine. You still have a large percentage of the mining fleets that are S19 Pro or older. Those machines are profitable at a hash price somewhere north of 7 or 8. Right now, hash price is running in the double digits. Post the halving, the hash price will come down to kind of 5-ish, most probably. And what we might even see is, if the hash rate dipped to 4, then all of a sudden those miners stop being profitable.
Yeah.
And it's a question of attrition. How long can they last before they have to shut things down? There's a lot of new hash rate coming online still. And I think, as more hash rate comes online, the difficulty will continue to increase. Those marginally profitable miners will move to break even and to a loss. Unless Bitcoin runs to triple digits, and then again, even old machines, people will plug them into their kitchens and run it off, the garage utility line. But
good way to heat your house.
I think the one word of warning I would make is that people think that just because demand for the ETFs is so high that this is the new normal. I don't think that's the case. I think we're seeing pent up demand. I think we're seeing this transition. We're only now seeing the early parts of these pension funds evaluating these assets. You're seeing BlackRock offering the ETF to their broader funds. You're seeing conservative, money managers like Merrill Lynch, Vanguard now saying, okay, for inbound requests, we'll sell you ETFs, but we're not going to go out and promote these instruments. We have to get through kind of this period of normalization. Don't know how long it'll last, but when the demand does normalize, and it will at some point, at that point, volatility will change and we may see a decrease.
Last time we spoke, I believe you guys were almost ready in Abu Dhabi. I believe that has come online since, correct? And that is the largest mining facility on the planet. Is that correct? So talk about that coming online, how that's affected you, and then I guess future plans to continue to scale at that level.
Yeah, so we think of our business as kind of in 3 buckets today. You have utility scale mining, where what we're doing is we're like the Abu Dhabi project, like what we do in West Texas. We have hundreds of megawatts, which we are able to curtail whenever the utility needs it as a part of a demand response mechanism. And these are projects where you're helping the grid load balance. And that, if you look in the United States today, miners are beginning to compete with AI companies. The Googles, the Amazons of the world right now, they're looking for access to reliable power. It has to be available 24/7 and a high-speed internet connection. And so if you look at certain parts of the US, and Amazon AWS just did this deal for $650 million for a data center by Talon Energy, where they went out and they locked up a project where they could get 650 megawatts of power. So the miners are going to be competing against AI companies for these types of sites. The good thing is miners don't need access to high-speed internet. We can go into stranded locations and use satellite links very efficiently. That's one bucket. The next bucket is what we've talked about as energy harvesting. This is where we're doing things like landfill methane gas, biomass. That is going to be a growing part of our business over the next 4 years. These projects take a long time to turn on. So you'll start seeing some reports this year of progress in that area, but it really starts turning on in the outer years. And then we have our technology business, which is where we sell firmware, we sell our immersion technology, and those products are just really starting to be sold now. We have our first early revenues of some of those products. And those provide miners and data center operators with a lot of efficiency gains in cooling and other things like that. So we believe that's a good diversification play. Internationally, we're looking at a lot of our large-scale projects. The African continent, we recently co-sponsored a Power in Africa conference in Washington, D.C., where we had heads of the power companies from the African nations come in, and we talked a lot about what we're doing in Abu Dhabi and how we could help do that in their countries. And so we're very proactively going out, and we've gotten actually quite a lot of very positive support from the Foreign Commercial Services arm of the U.S. government, where they are obviously very interested in fomenting U.S. inbound investment into African nations because of the China competitive threat. So that's been very good. We will expand in Latin America as well. And we're expanding our Abu Dhabi facility with additional hash rate. And so we're going to continue to see all these things growing. And based on the pipeline of machines that we announced on our earnings call, we have the ability to get to about 70 exahash just based on what we have coming in.
Which is incredible. It sounds like you guys are taking over the world. Interestingly, I mean, you're talking about Africa. It seemed wildly underreported recently that Ethiopia, I believe, is mining Bitcoin, correct? I think in the past there was reports Bahrain. I don't want to say the wrong country, but I believe Bahrain. We know that Qatar now is meeting with Nayib Bukele, potentially talking about these things. Doesn't seem like anybody's talking about the fact that sovereign nations are now mining Bitcoin. Or that they always were.
Yeah, I mean, I've been talking about this issue for a long time. It's the sovereigns are the single biggest competitors to the large public miners because they're really not interested in the cost to mine. They're looking to mine Bitcoin because they want to hold Bitcoin as a reserve asset. And if you hold Bitcoin as a reserve asset, you need to be able to ensure you can transact your Bitcoin. The only way to be able to ensure you can transact your Bitcoin is to mine it yourself. So, there's 1 million Bitcoin plus or minus left to be mined between now and 2140. No sovereign nation is going to sink $1 billion into infrastructure to go mine Bitcoin because they're thinking they're going to mine that 1 million Bitcoin because their pro rata share will be a much smaller piece of that. So this is all about nation state security and treasury management. And I think what we're going to see is you've seen a huge amount of gold being purchased by central banks, these nations, because they don't want to be dollarized or they want to reduce their exposure to the dollar. You're going to continue to see that with Bitcoin now. Countries are beginning to, allocate to Bitcoin as a way to hold a certain amount of reserves. There's a lot of testing going on. You got to realize that with only 21 million Bitcoin and the actual trading venues for Bitcoin are fairly limited still. You have Binance outside of the US, which is the biggest exchange. Coinbase in the US, Gemini, et cetera. If you're a sovereign and you happen to be sitting on 10,000 Bitcoin and you happen to need to go buy a battleship or something, these are large chunks of Bitcoin that may or may not go on and off the market. So I think people are a little wary. They're going to want to test. I've certainly seen some stress testing going on some of the ETFs. There were some hedge funds that were doing high velocity tests. 10x the volume. Does it work or doesn't it? And it seemed to work fine. So I think this is a developing market. The demand is going to continue to develop, but it's going to be very volatile.
When you talk about sovereign nations adding Bitcoin to their central bank, effectively, the few people who are telling the mining story are not including that part. Right? We don't hear
exactly.
It's talked about as this future theoretical narrative that might happen far down the road that some central bank somewhere is going to add Bitcoin to the balance sheet. And you're basically saying that that's exactly what's happening here.
Yeah. And, let's face it, the US government holds 1% of all the Bitcoin. It's not a reserve asset. I don't think Senator Warren would admit that, certainly. But the US government, because of what they have essentially confiscated from criminal activities, sits on 1% of the available Bitcoin. What's really amazing, you look at GBTC, a lot of the selling currently in GBTC is still bankruptcy related sales and liquidations. It's not people saying, oh my gosh, the fees are too high and I'm leaving. There's some of that. But I think generally speaking, once those bankruptcy sales are completed, the net inflows number will grow potentially. And it's not abating right now.
I don't think people are jockeying for position with fees at all, to your point. I think that there's the forced selling of those bankruptcies, and then there's the people who were trading the discount, and they sold when it closed. And that's what we saw early. But yeah, I think GBTC they've done the math, right? They didn't accidentally keep the fees exactly where they were. They've done the math and they know what they're doing and have clearly calculated how much will leave and for what reason. So I tend to agree with you. And I think that these are going to grow massively. Now, there's always this idea that one day there'll be no more Bitcoin left to mine and miners will go out of business and oh, woe is me, who will be there to secure the network. How much have ordinals and BRC20 tokens and all of this other activity now happening on Bitcoin alleviated that fear?
I think there was great proof last year. In May, we had the big bump with ordinals the first time around. Transaction fees ran up over the block reward. So in other words, transaction fees exceeded 6 Bitcoin in a block, in addition to the 6.25 Bitcoin that the subsidy was. In December, we had another month where that happened. We were mining some blocks that had over 7 Bitcoin per block in transaction fees. What you've now see is kind of the interest has abated Transaction fees have come down. They're still much higher than historical numbers, but they're not as high as they were in May and December. But we recently launched, for example, a product called Slipstream. This is a block reservation system. So, imagine all these financial institutions who are trading Bitcoin. Traditionally, you put your transaction in the mempool, you pay a fee to try and prioritize that further up in the queue, if you would. With our reservation system, people can now essentially reserve space, almost like a seat on an airplane, if you would, in blocks. And it's kind of use it or lose it. And when people do that, they pay us a fee over and above what we get in the way of transaction fees and block subsidies. And so between that, we also launched our L2 Enduro platform, which is open source to the public. We've given it to the community. And there's already a side chain on that, which allows you to essentially have use functionality of the EVM, but secured on the Bitcoin blockchain. And that's a side chain called Alice. And Enduro lets you build any side chain you want, and it's secured on the Bitcoin blockchain. And where people like Stacks and others issue tokens and charge for it, again, we've given this to the community. We think the more we can remove the friction from enabling applications on the Bitcoin blockchain, the better. But longer term for us, our energy harvesting business is all about generating energy, getting paid to generate that energy. We convert the energy into heat, and we sell the heat back into an industrial process. Because the vast majority of electricity used by industry is for heating things, and it's low-grade industrial heat. In doing that, that business, in theory, based on our estimates, the cost of energy to mine Bitcoin is zero, which means we can continue to mine Bitcoin, even if the block reward is a few sats and transaction fees are, moderate. So we're here for the long run. We view Bitcoin mining as a necessary part of securing the blockchain. We're going to continue to grow, continue to secure the blockchain even more, and we're going to continue to develop technologies that allow people to leverage the Bitcoin blockchain and make it even more useful, which means more transaction fees, which means more revenues for miners, more reason to keep the blockchain secure.
A year ago, we were using more electricity than the country of Argentina, and we were boiling the oceans, and Seneca Lake in New York was on fire. Seems like the environmental attacks have subsided. I mean, not from the Elizabeth Warrens of the world and such, although she's moved on to false stories about terrorist financing instead. Have you noticed at all that there's a little bit less criticism about the environmental impact of Bitcoin, or are we just not hearing about it as much on our end?
I think the power argument has academically been proven to be false regarding that you add Bitcoin mining, more fossil fuel comes online. So that narrative's been debunked. Are there places where Bitcoin miners are competing for energy with other people? Yeah, it's when the AI guys come in. I think the AI is going to use much more power than the Bitcoin mining industry globally uses, and it's going to use many factors of magnitude more. And the problem is they need the energy 24/7. Unlike Bitcoin miners who can shut down when the grid needs the energy, AI wants to keep running. And they want clean energy, so they're trying to take the nuclear energy, which is baseload energy. Now that does impact energy prices, because now the grid has to use higher levels of energy that's more thermal related. So I think if you were to have an ear in the boardroom at some of these large hyperscalers, I think you would hear them say, we want renewable energy, but if the only thing we can find is coal, let's go turn on a coal plant. You don't hear Bitcoin miners talking about that at all. So I think that whole narrative is going to shift to the AI guys. And plus the AI companies use a lot of water in what they do. And Bitcoin miners typically don't use water. We especially don't use water at all because our immersion technologies are closed loop and they're not water-based at all. So I think the narrative is going to shift to the AI
new boogeyman. A new boogeyman.
New boogeyman, yeah. But they have a lot of money and big lobby, and I wouldn't be surprised if the AI guys partner with the battery companies to try and make Bitcoin still look bad so they can take the power. But it'll be an interesting market.
They'll find a way. I mean, we know that when the bulk of the hash rate was in China, that Bitcoin wasn't necessarily the cleanest mining in the world. I mean, what percentage would you say, now that things have shifted so massively over the past few years, what percentage would you say of Bitcoin mining is using renewables or cleaner energy? I don't know exactly what the metric or terminology being used now is, but obviously the trend has been in that direction.
Yeah, sustainable energy, which includes nuclear, but not natural gas, and it's not net of carbon credits, so it's gross use. So no funky accounting. It's about 56% for the industry globally.
That's a very high number.
Oh, absolutely. I mean, we were in the 30% range 2 years ago. So no industry has transitioned as quickly as the Bitcoin mining industry. And again, we need and want stranded energy. And there's a huge amount of stranded renewable energy available because there is lack of transmission. The single biggest factor limiting the US and its ability to transition to clean energy is lack of transmission. And that's because how the utility model is created. The utilities have no incentive to add transmission because it's hugely capital intensive and they don't get paid enough for it.
So to be clear, you're talking about lost energy as it travels over long distances from the plant to where it eventually ends up being used. Is that correct?
Well, partially that, partially the fact that if I go build a solar plant today, a solar farm, I can't get it connected to the network. I can't get it connected to the grid. That's interconnect and transmission. 84% of the projects, there was a FERC report that was published late last year, 84% of the projects for renewable energy in the United States will likely never come to fruition because of lack of transmission.
That's crazy. That's crazy.
Yep. $3 trillion is needed to get there. So,
and Bitcoiners can go right to the source, right? So you don't have to worry about any of that. Well, then I look forward to a time when the environmental FUD dies completely. I have to ask you, as we kind of run towards time here, what are you excited about moving forward in the coming years? I mean, obviously you guys are scaling, but is there anything we may have missed that's really on your radar?
I think it's this combination of the energy harvesting business and what I call the long tail of Bitcoin mining. Eventually, intelligent devices, and I have a big background in the IoT world, intelligent devices like battery systems, like EVs, things that store electricity in volume or things that consume electricity in volume will have intelligence added to them so they can make decisions regarding, do I use grid energy? Do I use battery energy? Do I use my excess energy to mine some Bitcoin? What am I going to do with my energy? And you're going to have essentially distribution of decision-making regarding demand response go down to the device level. And there will be very interesting marketplaces that will sit and trade this energy because at the end of the day, it's just electrons. When you get a little bit of Bitcoin mining in every single battery, every EV, things like that, you now have a hugely decentralized Bitcoin blockchain where the cost of energy to mine is not a factor in whether you're doing it or not necessarily. And so now you have the long tail. You'll have utility scale miners like ourselves, and then you'll have this long tail of space heaters sitting in a home, a battery power wall. These are very interesting potential new businesses for the Teslas of the world. And I think we're going to see this orthogonal competitive competition for hash rate, which is going to be these tiny little devices. It's like you think about the internet, the long tail. We're about to see the long tail of Bitcoin mining start over the next 4 or 5 years. It's going to take, the technology's not there. We're obviously driving a lot of innovation in that side. But I think where you're really going to start seeing this appear is kind of 2028 and beyond.
Sounds like you're a few cycles ahead in your thinking.
No, I'm a futurist, so.
That's a good thing. Somebody has to be, and that's probably how we've ended up debunking a lot of these myths and actually fixing the things that were broken. So, rather than just towing the line and continuing with the same old processes that did have some problems, right? I mean, it's not like Bitcoin mining's always been perfect. So it's good to know that it's advancing the right direction. Fred, thank you so much. Where can people follow you after this conversation and check out everything Marathon's doing?
I'm on Twitter, or X, formerly known as Twitter. FGTHIEL, same place on Telegram, or just mara.com is our website. So
thank you so much. Great to catch up. I wish we had more time, so we're gonna have to do this, run this back sooner than later, if that's okay with you.
Absolutely, anytime. Love talking to you.
Thanks so much, Fred.
Let's go.